Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the daily indicators for Wednesday, December 16th. Now, there are several indicators on the schedule for today, but I wonder how important they'll be as everyone waits for the FOMC meeting. That's at 1900 GMT. So we have a long ways to go today. Now, the day starts with the flash PMIs for December from France, Germany, and the Eurozone between 8 and 9 a.m. GMT. The preliminary estimates for the EU as a whole are forecast to be really little change from November. The risk, in my view, is that they disappoint to the downside as the European economy takes on board the shocks from the refugee crisis and the Paris bombings, although so far we haven't really seen much of an impact from those events in the statistics. At 9:30 GMT, we get UK average earnings for October, a very important indicator for the pound. Average earnings are expected to be up 2.5% year on year. That's a sharp deceleration from a 3% growth in October. Now, stagnating growth in wages has been a matter of great concern for the Bank of England, so a result like this would probably be negative for the pound. The U.S. indicators started at 13:30 GMT with U.S. housing starts for November. Starts are expected to accelerate to a 1,130,000 or 1.13 million annual pace from 1.06 million. That would be a good figure, and ordinarily it might boost the dollar, but given the FOMC meeting just a little bit lighter, only an extreme number is likely to attract much attention. Then at 1900 GMT, the FOMC meeting. Has a Fed meeting ever been so much in focus? Now, I discussed this meeting and my view on it in great detail yesterday, so please see that video for a full rundown. It's all pretty complicated, but it really depends on how they steer a course between too little guidance and too much guidance. In any event, given the time of year when markets are thinner than usual and the significance of the moment, I think we can expect some fireworks from both the FX and the equity markets. Then finally, at 21:45 GMT, New Zealand announces its third quarter GDP figure. Last week, the Reserve Bank of New Zealand cut interest rates by 25 basis points, but the Kiwi rallied. One reason was that for all their rhetoric around expectations for a lower Kiwi, they revised up their GDP estimates. Now, the market consensus is that growth accelerated to plus 0.8% quarter on quarter in the Q3 from plus 4.4% in Q2, although that would leave the year-on-year rate of change little changed at 2.3% versus 2.4%. Ordinarily a big figure, but once again, in the aftermath of the Fed, this number may not garner as much attention as usual. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.